Some of Australia's lesser-known large stocks outperform the rest of the market in the first quarter of the year. The Reserve Bank Board meets today with financial markets and a growing number of economists expecting no change to rates, and the world's only millennial Prime Minister gets kicked out of office. It's Tuesday, the 4th of April, 2023. Welcome to Fear and Greed, Australia's most popular business podcast. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show today, you have an interview with Rodrigo Pizarro, the CEO of L'Oreal Australia and New Zealand. This is an interesting chat, largely because of the way they ran their business throughout the pandemic.
Yes, it's a chat that didn't end up where I thought it would end up when we first started. Now, we did start by talking about the lipstick index, which is an economic measure, really, about people buying more cosmetics when times are tough. So we talk about that. Then we get into how L'Oreal thinks about staff, how it treated staff during the pandemic, and then about data, about how cosmetics will fit into the metaverse. Wide-ranging is probably how I'd put it.
Yeah, cosmetics and metaverse are not two things that go kind of naturally together for me, but it is a fascinating conversation, so well worth sticking around for. The main story, though, this morning, Sean, software leader WiseTech Global, gold digger Newcrest Mining, and gaming machine manufacturer Aristocrat Leisure are the best performing large cap stocks during the March quarter, with the banks among the worst. But it's the defensive stocks that attracted most interest.
Yes, it was a relatively lackluster 3 months from the S&P ASX 200 compared to many other assets around the world. The bourse closed the quarter up just 2.7% compared to 8% from the US's S&P 500 and 20% from the tech stock heavy NASDAQ. 5 of the top 10 stocks here went backwards. The big 4 banks, Commonwealth Bank, National Australia Bank, Westpac and ANZ, and the oil and gas leader Woodside. Now, that reflected perceptions that peak profit margins at banks have passed and commodity prices in the case of Woodside. Only one of the stocks ranked 11 to 20 lost ground, and that was the other oil and gas major, Santos. But when the biggest stocks go backwards, it's hard for the bourse to go forward. Of the top 10, the best performer was Macquarie Group, which rose more than 9%. BHP jumped nearly 4% for the quarter, and CSL was up 2%.
What's behind all this, Sean? Is there any trend showing through?
Well, broadly, it's the safer stocks among the large caps, defined here as the top 20 stocks, or the more defensive investments that did best. They're companies that tend not to shoot the lights out, but also not underperform when things are tough. And with interest rates rising and the chance of a recession real, investors looked for safety. Woolworths, for example, jumped 15% during the March quarter, while Coles was up 10%. Transurban, the toll road operator, it was up 10% also. Industrial property giant Goodman was up 9%. Telstra finished 7% higher. They might be dull, but they're reliable, some of those stocks.
Sean, but so far you haven't actually mentioned the 3 best performers. They're the ones that I mentioned before: WiseTech, Newcrest, and Aristocrat Leisure.
Yes, that's because they're a bit difficult to characterise. Now, WiseTech was the best of the top 20. It jumped 32% during the quarter. It mirrors what happened for many Wall Street tech stocks. They were sold down very, very hard last year, and now they are making back ground. Newcrest did well, up 29% because the price of gold jumped. Now, I suppose that does feed into the safety story. In the case of Aristocrat Leisure, it was dumped late last year, big time. So its starting point was, relatively speaking, below some of its peers. All in all, Michael, it's been a pretty lackluster start to the year on the Australian equity market, at least compared to other equity markets. Mind you, if you had 4 quarters like March, the market would end up 11% higher for the year. No one would be complaining then. It is interesting, though, when you are investing, and obviously you need to go and get some professional advice to understand your own circumstances, it's not always the popular names that do best.
Now, Sean, everything that you've just talked about is in the distant past now, because we're into the new quarter. How has the share market been going so far?
Well, day one of the new quarter, yesterday, was pretty good, really. The S&P ASX 200 finished up 0.6% to 7,223 points. That's the highest close in almost a month. ANZ, Westpac and Commonwealth Bank all ended the day up 1% or more. Wesfarmers was up nearly 2%. Woodside Energy and Santos both jumped 2.7%. Now, that was on the back of higher oil prices. WiseTech Global and Goodman both finished more than 2% higher. The gold stocks tended to underperform, with Newcrest down 2.2%, while the big iron ore miners also went backwards. A couple of corporate news stories worth a mention. The chief executive of the Star Entertainment Group's flagship Sydney casino resigned yesterday after just 8 months in the job. He was both CEO and head of transformation. Not a good look for the gaming group, just as the company's trying to show how it can reform its operations. And Lake Resources said its direct lithium extraction technology, provided by Part and Lilac Solutions, has produced lithium carbonate purity grades greater than 99.8% at its facility in Canada. That is extremely promising. The processing plant remains at the demonstration stage, and Lithium Explorer says it's in the process of evaluating project timelines and capital costs, but 99.8%, not bad. The announcement was enough to send Lake Resources share price up 9%, the best on the day.
99.8%. Sean Almer says, not bad. All right, international markets, what's been happening?
The past 24 hours has all been about oil. Anyone hoping for some relief at the petrol bowser is going to be disappointed. OPEC Plus, the cartel of the largest oil-producing nations, announced a surprise cut in oil production of more than 1 million barrels a day. Previously, OPEC had said it would hold prices steady. Oil futures jumped sharply yesterday morning. Now, we talk about how we all feel when oil prices rise and petrol prices rise, but the impact, Michael, is much, much greater. Higher oil prices are inflationary, and central banks have said they're going to keep hiking rates until they've killed off inflation. So the news out of OPEC Plus is bad news for those hoping that global central banks might stop lifting rates. In fact, many people thought they might even start cutting rates later this year. It also triggered tension between the US and the world's biggest producer, Saudi Arabia. The Biden administration came out and said the cuts were ill-advised. So plenty going on in oil markets. Away from crude, gold is lower and the Aussie dollar is buying 66.7 US cents, Michael.
All right, there is plenty happening. We'll be back in a moment with the rest of the day's business news. Sean, the federal opposition is set to announce its position on the voice referendum this week as criticism of the party following the weekend's defeat in the Aston by-election escalates.
A party room meeting is expected in Canberra tomorrow. Now, remember, Parliament isn't sitting, so most of the pollies have gone back to their electorates. The meeting is set to decide a response to Labor's draft constitutional changes. Media reports suggest the coalition won't push for a rival model, but will ask for changes. Now, yesterday, Shadow Attorney General Julian Leeser was at the National Press Club, and he provided a pretty good indication of what the opposition wants. He said the proposed constitutional clause allowing Indigenous voice to make representations to both Parliament and the executive government should be scrapped, saying it wasn't clear what make representations means. Kind of interesting that, Michael. Clearly, the coalition are not going to ask for a rewrite, but they do need to look as if they're contributing to the debate. So it just will be interesting how things work out tomorrow.
Yeah, and no doubt that meeting will be a bit of a venting session, you would imagine, following you'd have to describe the Aston by-election as disastrous for the coalition, because the opposition became the first in 100 years to lose a seat at a by-election to a sitting government.
Yes. Now, former Prime Minister Malcolm Turnbull, who isn't a stranger to criticising the Libs, yesterday said it's clear that the party needs to move back to the centre, but that's difficult for Peter Dutton because of his reputation as a hard right culture warrior. He added, Turnbull added, that there is no obvious alternative. Meanwhile, one of two Liberal MPs left in urban Melbourne, Keith Wallahan, says the party needs to come to the middle following its loss in Aston.
Just thinking as good old Joe taxpayer here, Sean.
Yes.
Couldn't they have had this meeting last week when they were still in Canberra, rather than calling it for tomorrow and potentially bringing people back, unless they're all joining by Zoom, in which case go for it. But, I mean, they didn't really need to wait until after the by-election in order to decide their position on this, did they?
Well, they probably didn't realise what a disaster the by-election would be. And the fact that they're all gathering tomorrow just shows how serious this has become for the Liberal Party. So I know it's about the voice, but it's going to be a lot more than that. I agree. What a waste of taxpayers' money. They should have had it last week, but I'm sure last week they weren't thinking about having it this week. It's just what happened in Aston has forced their hand.
Yeah, good point. All right, now, Sean, speaking of big meetings, the Reserve Bank Board meets today to decide whether to hike rates for the 11th consecutive time. And data on prices and the building sector released yesterday supports the case for a pause.
That's right, Michael. The Melbourne Institute headline inflation gauge rose by just 0.3% in March, or 5.7% over the year, which is lower than expected. Now, the Melbourne Institute index has been undershooting the official monthly Bureau of Statistics data, but it's good in terms of a directional guide. And data released by the Bureau yesterday shows that building approvals rose by 4% in February, which was well below the 10% expected by economists. House approvals were 11% higher, while multi-units fell by more than 8%. Multi-unit approvals are now down more than 50% compared to a year ago, which is a big problem for housing supply over the next few years, especially as migration is rising. House approvals are down 13.6% compared to a year ago. Approvals activity is low because of the higher cost of borrowing, i.e. interest rates, and an increase in costs of materials for builders. So what's all that mean for rates? Well, certainly it supports the case of no rate rise today. Financial markets have priced in the status quo today, and the consensus among market economists is now the same.
Sean, on the same topic, a jump in demand for new houses alongside slowing supply is set to crunch the housing and rental market even more, with a housing shortfall of more than 100,000 homes expected over the next 5 years. That's a sizable shortfall.
It is. That's the outlook from the National Housing Finance and Investment Corporation, much more dire than what they put out 12 months ago. It says housing affordability and supply are likely to remain challenging for some years. On the demand side, you have a surge in immigration that's occurred since borders reopened. Net migration forecast suggests that there'll be an increase of 268,000 up until 2024. There's also expected to be a big jump in new household formations. Now, that's not migration. Mostly it's individuals going and setting up home themselves. On the flip side, you have rising interest rates and construction costs dampening supply. Put that together, there's likely to be a shortage of around 106,000 dwellings over the 5 years to 2027. Of course, this is happening with rates potentially still rising. Certainly, the full impact of the rate rise is still to be felt. And the federal government struggling to get its $10 billion Housing Australia Future Fund through the Parliament.
Coles, Sean, has agreed to acquire 2 automated milk processing facilities, one in Victoria, one in New South Wales, for around $105 million as it looks to shore up supplies of milk.
Do you have any idea how many milking cows there are in Australia, Michael?
I can take a guess.
Go on.
800,000. And that is based on absolutely nothing. I plucked a number out of the air.
There's 1.34 million milking cows.
That is a lot of udders. That is what? That's 5.2 million teats.
Yes. That's an obscure way of looking at it. So there are 5.2 million teats in Australia, producing 8,554 million litres of milk each year. Does every cow only have 4 teats? Like, are there cows that have more?
Sean, I'm not a dairy expert, as you can see, but no, I don't believe so. I think 4 is the generally accepted number of teats on a cow.
Good. Okay, so 5.2 million teats producing 8,554 million litres of milk each year. The industry employs around 35,000 people in 4,420 dairy farm businesses. That's according to Dairy Australia. Now, let's get more serious. Australia actually has 4 big dairy groups, and all are trying to find new ways to make money up the value curve. That's just away from just processing milk, or it seems are thinking about winding down. Now, one of those is Canadian-listed Saputo, which entered Australia 10 years ago. It bought Warrnambool Cheese and Butter Factory Company and then Murray Goulburn in 2017. Now it's selling 2 of its processing facilities to Coles. For Coles, it means getting closer to the dairy farmer because the processing plants actually buy the milk from the farm gate. That causes some unease in the sector, the fact that Coles is getting closer to the farmer. It's been a hard industry to make money in recent times, and farmers are leaving. There's been a lot of criticism about the pressure coming from the supermarkets on the processors and the farmers. Coles, of course, needs surety of supply. I suspect this might not be the last of these deals coming from big supermarkets.
All right. And Sean, before we move on to international news, we'd like to pay our respects on the passing of Yunupingu, a senior Yolngu lawman, Gumaj clan leader and keeper of songlines, aged 74 after a long illness. Yunupingu campaigned for Aboriginal land rights and economic development and was also the face of the Gama Festival. And there's been an extraordinary outpouring of grief and tributes right around the country over the last 24 hours. Now, Sean, in international news, it's the battle really between old world media, represented by the New York Times, and new world media, represented by Twitter. And it is all over the verification badge.
The New York Times has lost its Twitter verified badge after attracting the ire of billionaire owner Elon Musk over its refusal to pay for the privilege, according to Bloomberg. The main account of the New York Times, which has about 55 million followers, no longer bears a verification checkmark, though several of its subsection accounts remain verified. The paper was among the first major news publications to say it won't be paying a fee to have its Twitter accounts verified. Musk, of course, has been pushing an $8 per month Twitter Blue subscription as a main way to remain verified on his social network. That's the $8 per month, $96 a year, that the New York Times doesn't want to pay. Musk said the paper charges for its own subscription service and it's being hypocritical by not paying Twitter. Oh, for someone who's worked in media for so many years, particularly in newspapers, I love the irony here.
Yes, it is quite ironic, but I just don't understand this at all because verification, I do feel, should be free because it's actually a service to users, not to the person who is paying for the verification. It's a service to the other users of Twitter to actually know that the person that you're dealing with is the legitimate, say, New York Times or otherwise.
The real Michael Thompson.
Yeah, absolutely. Absolutely. So there's a big question mark over this one for me, and I'm sure Elon Musk is going to care about my opinion.
Yeah. Did you know that many years ago when I was the editor-in-chief of the Sydney Morning Herald and I opened a Facebook account and then someone set up a fake account under my name? And the thing, I mean, it was irritating that someone set up a fake account and it was, most of the posts were very right-wing style posts. What actually irritated me more than anything was the fact that the fake Sean Aylmer had twice as many followers as the real Sean Aylmer.
What does that tell you, Sean, about what you need to do in order to get to get traction on social media? You need to make some waves, don't you?
Exactly.
Oh, that is a blow to the ego.
Yeah.
Speaking of blows to the ego, Sean, the world's youngest prime minister, Finland's Sanna Marin, has conceded defeat in the Nordic country's parliamentary election, meaning there is no country now being led by a millennial. And as a millennial myself, I feel that quite strongly, whereas you, I'm sure, would be quite happy.
Absolutely. One for the old blokes. Of course, Marin was a rock star for her generation. She was the youngest prime minister at 37 years of age when she won the election in 2019 in Finland and has been a fierce advocate of defending Ukraine. But the irony in this one, the age of social media really caught up with her. Her off-duty activities were highly scrutinised. She was caught on private videos partying with friends, creating a controversy in socially conservative Finland. She's also appeared on the covers of Vogue and Time magazine. She has 1 million followers on Instagram. None of that could help her in the election on the weekend. Now, she remains very popular among many Finns, particularly young moderates, but she's also antagonised some conservatives with spending on pensions. She was also criticised for what she called the boisterous partying with social media influencers at the height of Europe's energy crisis.
All right. Up next is the Fear and Greed Daily interview with Rodrigo Pizarro, CEO of L'Oreal Australia and New Zealand.
Yes, as we mentioned at the top of the show, everything from the use of data and looking after staff to how you sell cosmetics in the metaverse.
Yeah, it's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Tuesday, the 4th of April, 2023. Make sure you're following the podcast. Join us online on LinkedIn, on Instagram, Twitter, and Facebook. And do not forget that you can stay up to date on all the business news with Alexa and your Amazon Echo smart speaker. Simply say, Alexa, play the Fear and Greed podcast. To catch the latest episode, grab yours now at amazon.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.